Welcome to Joe Kirogo and Associates. My name is CPA-K Kirogo. Today we want to talk about the Tax Laws Amendment Act of 2024. This act was assented by the President on the 11th of December 2024, and the act commences from 27th of December 2024. Initially we had discussed about the Tax Laws Amendment Bill, which was at the floor of Parliament, and now it is now an act of Parliament. And when you get to this act, you see the definitions which have been enhanced. We start with the definition which has been enhanced, like individual retirement fund, the pension fund, the provident fund, and these funds where to mean that registered individual retirement fund, where the trust is now registered, must be registered with Retirement Benefit Authority, and also the registered pension fund must be registered with the Retirement Benefit Authority, and also the Provident Fund must be registered with the Retirement Benefit Authority, and also definition of royalties. When you get to E, you will see the deletion of wife employment income, wife professional income, and wife professional income rate. Those are just definitions which are on this Act. If you get to the Act, you're going to get more information on this, or you can contact us to get more information on this. You'll also get some definition like donation. Maybe you can do the definition of donation. Donation to mean a benefit of money of any form, or promissory note, or a benefit of any kind conferred to a person with over any consideration or in grants. The other one is a public entity, which means ministry, state department, state corporation, county government, or any agency of the county or national government. Those are some of the definitions which has been enhanced on this Act. I want to dwell on the key highlights which we have highlighted on this Act. These are just some few highlights. If we get to the Act, it's more detailed. The first one is the replacement of DST, Digital Services Tax. It will be replaced with a significant economic presence. The rate of DST was at 1.5%, and now the significant economic presence rose to 6%. And the aim of this is to align the taxation of digital services with the international best practices, and definitely to allow the government to expand its tax base. The second one is provide the minimum top-up tax with the alignment of Kenya with the multinational best practice, global best practice, for a company with a minimum rate of 15%. And definitely for this minimum top-up, the multinational enterprise must have a turnover of 100 billion and above. The third one is about the AHL, the Affordable Housing Levy. The Affordable Housing Levy, which we discussed in our previous videos, it now becomes an allowable deduction while calculating for taxable income for individual. And this is to address the issue of double taxation. As how we discussed previously, initially there was affordable housing relief, which now has been deleted on this Act, which it is being replaced by the affordable housing, on it being an allowable deduction, which will be computed before you compute for taxable income. Definitely to make sure that the taxpayer gets more disposable income at the end of the day. The other one is increase the amount of deductible in respect to the contribution to the registered funds. Initially it was 20,000 per month, and now this is being increased to 30,000 per month. The other one is the replacement of the NHIF to SHIF Act of 2023 by amending the section 31. So this Act also enhances on the SHA, or Social Health Authority. And also another highlight is the proposal of payment of supply of goods and services or facilitating payments or disputed services or facilitating payments of digital marketplace, which will be subject to withholding tax going forward. And those are all the highlights that we want to highlight today. I know downwards on that act there are more amendments on the VAT, which we maybe get time to discuss more, the more enhancement of VAT and the excise duty. But if you want for us to extend more on this act, you can contact us through our contact down there, so that we can be able to elaborate more. Maybe what I can highlight, I can finish by this act is to say that definitely the government with this Tax Law Amendment Act and other acts that have been like the Tax Procedure Act, which were signed during the same period, the government is seeking for taxpayer to have more disposable income. That's why there are amendment of the retirement fund, about the meals, and also affordable housing levy and the SHA. And this is maybe I can say as a tax practitioner, it is a fair move by the government. So thank you very much.